Hello and welcome to Crypto Weeklies. In this video, we are going to analyze the VeChain and its token VET. None of the content is financial advice. Right now, the price of VET is at around 2 cents, slightly above that. From the December 2024 highs, the price at that point was at around 7.5 cent. That corresponded to the 0.23 fib level drawn from the 2021 peak to 2020 over here 2023 mid-May drop for VeChain. From that point in time, from May till today, you can see VeChain has created a series of higher lows. Potentially one area of support coming close to between 2 cents and the current price of about 2.3 cents. Again, none of the content financial advice. From the machine learning based price forecast though, if there is a non-euphoria bull rally in the remainder of year 2025, the price could be somewhere between 2.5 cent to about 5 cents. With euphoria, that is with 2 standard deviation moves with a 95 percentile ceiling estimate in the next 6 months, the price forecasted is between 2.9 cents and about 11 cents. So 11 cents price action would still be much lower than the previous all-time high at around 27 cents, but that 11 cents would be close to the 0.382 fib level on the retracement. If we were to go back and check what the market cap of VeChain was in 2021, and if there were any major divergences between the price and the market cap growth from cycle to cycle, to analyze if there is something underlying the current downturn for VeChain. This is the price ratio from 2019. Essentially in 2021, the price chart peaked at around 27-28 cents as TradingView describes it. But in terms of the market cap also, thanks to the decent tokenomics that VeChain has had, the market cap also peaked back in 2021 at around 15 billion. This time around, the market cap peaked at around 1/3 of that, around 5 billion. Right now, the market cap is less than 2 billion for VeChain. It has a max supply at around 86 billion, out of which 86.7 billion, out of which almost 86 billions are already in circulation. Does boast a decent tokenomics in terms of the percent token released, almost 99.1516% token. Almost entirety of the supply is released in circulation. In terms of the Fibonacci level based predictions, the 0.23 that VeChain tagged in December, if there is a non-euphoria bull rally, peak could be close to that. The 0.382 is the euphoria peak estimated, and there is always a room for a higher high that is higher than the previous market cycle based high that is forecasted if the price action goes to that euphoria blow off top 3 standard deviation peak, where the confidence level of this model is 99.7% confidence that the price stays within the bounds of this red line if there is a 3 standard deviation move that is between 3.3 cents and about 25 cents. Although 25 cents over here is lower than the 27 cents 2021 high, you would notice that in that week, the weekly average price was at around 21.5 cents. So this model deals with the weekly average price, not the weekly highs, weekly lows, not the OHLC, open, high, low, and close. The weekly average price forecasted in that environment of a 3 standard deviation move is around 25 cents. Again, the eventual peak could be slightly 5 to 10 cents higher in that environment, like it was back in 2021. The eventual peak was 27 cents, but the weekly average was at around 21 cents. So that's the 3 standard deviation case for VeChain. By the way, all the models over here are available for free. The link is on the bottom of your screen, cryptoweeklies.com. If you like this content, please give a like and subscribe. The regression based fair value estimation using the polynomial regression model. The pink line over here estimates in a crypto cycle adjusted manner what is a fair value, that is what is a fair value during the market in the bullish phase and what is the fair value in the bearish phase. Especially now, whenever the price action has gone one standard deviation residual lower than the fair value that is captured by this green line, accumulating below the green line, historically speaking, has not been the worst idea. Right now, that green line is at around 3.3 cents. So right now, per this model, the asset is in an accumulation state. If the opposite of one standard deviation residual to the downside, which is this yellow line, which is one standard deviation residual to the upside, if that were materialized, there is an area of confluence at around 11.5 cents, confluent with the two standard deviation price ceiling, that is using machine learning model, and the regression based one standard deviation residual, and the 3.8 to fib level, three multiple areas of confluence at around 11.3 cents. So that could be a realistic case scenario for VeChain across the three models. If on the other hand, if there is a slightly higher high for VeChain that is captured by the two standard deviation or 95 percentile price action analysis, that is the price action staying about 95% of the time below the orange line, that orange line currently corresponds to 22.6 cents, that is closer to that 3 standard deviation ceiling. Right now it's at around 22 cents, but if you were to extrapolate in 6 months, that could easily be that close to the 25 cents level, provided that the slope of the regression function stays the same. For that to happen, price action has to catch up to first to the green line, then the fair value comes at around 6.5 cents, which is close to the one standard deviation machine learning based price forecast for VeChain. Now looking at some of the accumulation related models, these price color coded with respect to the regression based risk help identify whenever the risk is lower than 20%, as this model is, as these models shown by the color code of blue and purple. Essentially the purple is whenever the risk is less than 10%. These indicated great DCA in the market or accumulation territory in the market. The opposite of this is whenever the at a sufficiently higher risk, again between 0.4 and 0.7, that's when for any rally, if the risk level gets amplified between 0.4 and 0.7 risk, that is at least historically speaking intermediate rally to notice and DCA out of the trade. If that were to materialize per this model, the 0.4 price action between 10 cents and 16 cents is between the 0.4 and 0.7 risk. So that is one regression risk based forecast for VeChain. The simple moving average based risk has been at around right now at around 17% second best time to DCA. If it were to go to that the intermediate risk level between 0.3 and 0.5, like it went in December 2023 and December 2024, between 0.3 is at around 9 cents and 0.5 is at around 13 cents. So that midpoint is at around 11 cents for VeChain per the simple moving average based risk. At the end, we have a confluent aggregated estimate. The time weighted average price, though this blue line helps a clear draw a picture of a clearer line in sand, especially in the bear market years. Potentially this model could come useful in mid 2026 to late 2026 if the prices at that point after reaching their eventual 2025 peaks come crashing down below the blue line, as they did back in mid 2022, again 4 years from 2026. DCA below the blue line in the bear market from a time weighted average price based perspective was not a worst idea. Again, right now the prices are still below the time weighted average price at around 3.3 cents. Again, that becomes another area of confluence at that level. Together, the estimated bull run target for VeChain, as estimated by the risk-based models, is at around 54 cents. That is assuming that during the peak uh, market cycle euphoria, if VeChain participates in that euphoria phase, the price goes to the 95 risk level or 0.95 risk. Right now the weighted risk is only 4%, but if you are slightly more conservative, taking a 50%, between 50% and 70% of this target, takes the target to close to that previous all-time high at around 27 cents. And if you take an 80% of that, that is close to that 40 cent, that is 40 cents target for VeChain. And with that, I would like to conclude. Hope you enjoyed the content. Again, at the most area of Confluence is at around 11.5 cents level for VeChain, then the secondary at around 21 cents. And if there is a new all-time high in store, that is at close to 1.618 at that risk-based target at around between 40 cents and 43 cents. And hope you like this content. If you did, hope you give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.